All right, welcome everyone. Thank you for attending. My name is Seewing Yee from the Yee Real Estate Network, and my guest speaker is Ms. Maureen McCann from Spartan Invest. And today we're going to talk about what kind of services she provide. By the way, I own a real estate investment club here in San Francisco Bay Area, and what we do is we take our California out-of-state investors to buy out-of-state turnkey cash flow properties. So we align ourselves with some highly reputable, the so-called turnkey providers in different markets in the country, whereby they have the whole one-stop shop system in place. They have done all the advanced work in that market. They have everything, turnkey property management, and all the resources available for out-of-state investors. They can pick a property and just invest passively and let the property management in that market to over time to help them achieve real estate wealth. And this case is a primary example. And Maureen McCann with Spartan Invest have a nice niche, if you will. They service the market, expanding market of in the South, which is the entire state of Alabama. They have properties located in throughout all the major cities in Alabama, and they also have market presence in northern Georgia as well. And finally, they have a presence in some parts of Tennessee. And in fact, all these sub-markets, if you will, I call it the hybrid markets, where you get some stability of a cash flow, stable economy versus some potential for growth, some positive trends, economic trends that for the foreseeable future, it'll be a very good investment for out-of-state real estate investors. So Maureen, before I ask you to share what makes your company very, very unique, before you do that, I'm going to show this particular slide. And the reason why, we're not going to go over this. This is something that you have available in your company, Spartan Invest. Every week or so, you have new inventories of turnkey, completely rehab properties, and new construction as well. All good cash flow, all vetted. You have done most of the research and due diligence on behalf of out-of-state turnkey investors. So this is you can call it very passive, a very and good investment, long-term, powerful system that you're promoting. So we're not going to go over the specifics of each of these properties. So tell the audience, Maureen, go over some of these type of properties from a high level, 20,000 foot view.
Yeah.
And then also, in fact, before you do that, what makes Spartan Invest and the turnkey system that you guys are promoting, what makes a potential out-of-state real estate investor that want to work with you guys, and how can you help them to achieve their long-term real estate investment goals?
Yeah, happy to, Seewing. So Spartan Invest is a company that it's a true premier turnkey company. Turnkey means that we're fully integrated, meaning that we go out and we buy the property. So we find the distressed assets. We do a quality renovation, replace the roof, HVAC, water heater. So we defer large CapEx expenditures for years to come. All solid surfaces, granite countertops. We do a really nice quality renovation, upgrade electrical and plumbing. That's always important for investors to know about. We specialize in single family in the Southeast in markets that are emerging and growing. These are areas that offer a diverse and stable economy, that are business friendly, that really attract a lot of new employers or businesses to expand and hire more. There's a tax benefit to our companies that do business in our state, so that the more people that they hire from us locally, the better their tax advantages are from a business perspective. So we really recognize that there are investors who want to diversify their holdings. And it usually happens, Seewing, that these are, I usually wind up talking to a lot of 40 and 50-year-olds usually. I love it when I get the 20 and 30-year-olds, but they're not as frequent. I think it's because the 40 and 50-year-olds, or I'm in that group. So we're looking for, we're looking at our future, our retirement goals. We're looking at if we've got college expenses. We're looking at our long-term healthcare costs. And when you recognize sort of the vulnerability of position that you're in, where you just have one stream of income, or maybe you're married or not married, and you've got two incomes coming into a household, if one of those goes away, that puts us in very precarious situations if we are not financially set up to have streams of income, streams of multiple income or multiple streams of income coming in. So we really resonate with the investors who are looking to get into real estate. And the easiest way to do it is through a single family, because you're not having to come up with a large capital down payment like you would with a multi-unit. But I do have investors that take their single families, bundle them up, 1031 exchange them into larger projects. But it's a really nice way to get started into real estate, because your 25% down on a $150,000 house is much more palatable than, say, having to come up with, 3 or 10% down on a $2 million multi-unit. So it's an easy way to enter into the real estate market. What really makes Spartan different and separates ourselves out from the other turnkey companies is, one, we just really have a genuine care and desire to see our investors succeed, because the way that our business model is set up is that we only get paid if our investors succeed. And we have a high accountability in our company. We are truly, most property management companies are not set up or designed to be a paid for performance business model. And what that means is that everyone in my company has a bonus structure tied directly to an outcome that we want for the investor. So that means we have people bonused on occupancy rate, turn time, days to security deposit, renewal rates, eviction rates, accounts receivable, quality of renovation, renewal rates, all the things that matter, all the outcomes that are really important to our investors. I have a team member assigned that KPI to be able to deliver on that. And we measure it every 5 business days. So this is not just like, hey, we're just going to go flip a house and sell it to you and hope good luck on the property management piece because we got our money and we're running. That's not how we're operated at all. We're designed so that we find quality products in good neighborhoods, quality neighborhoods, decent schools, low crime rates, in emerging markets that offer an investor the opportunity to get in to a property, to start earning in the 5 ways that real estate pays you. And then we manage that whole process from finding it, funding it, renovating it, tenanting it, and managing it, so that you don't have to do that. You just have to learn about our company, learn about our system, learn about how we do business, see if that is agreeable to you or not. And then you make the decision to go, okay, this is a company that I'm going to choose to partner with because we want to actually help you build a portfolio. And full disclosure right here is my business partners and I, we started Spartan because we want to create massive amounts of cash flow and wealth building through owning rental properties. We could do multi-units. We chose single family. Single family is a really great way to get investors into real estate as an introduction. And so we want our investors to succeed because when we get to our goal of 5,000 units under management, that produces a large, sum of income for us. But guess what? We only earn if our investors earn, right? So my investors, their properties need to be rented, cash flowing, performing. And when we do all of those things, then Spartan benefits. So it's not like I benefit and you don't, right? It is, I only benefit if you do. So that's how we're set up and designed. And we're really focused on the customer experience. It is of the utmost importance to all of the leadership team and the owners in Spartan to make sure that the product we offer is exceptional, the customer service communication is exceptional, the touch points that we do every single month with our investors. It's a proactive call that comes each month because we want you to be aware of what's happening with your property, because we have investors in, I don't know, 17 more countries, a lot here in the United States. They're busy. So we just have to make sure that we communicate to them every single month. That's why I've got a dedicated customer service department for customer service managers. And their job is to call the investor every month with an update proactively. So when you ask, what is it about Spartan Invest that makes us a standout in the industry? 9 years in the business, excellent reputation, almost 2,100 doors under management. That's almost 300 million assets under management, with high occupancy rate, low turnover rate. These are things that you as an investor are wanting to align yourself with so that you can start out successful as your first time in investing. So customer service, really dedicated team, and delivering a solid focus, metrics-driven focus on results.
Wow, amazing business model, ideal business model. This is the best way to do it. Our investor couldn't ask for a better company to work with. So you cover all the bases. So very well put. And you guys are about, if not already, there's a leading turnkey provider in the country, and servicing a very good region of the country, which is poised to grow, which is kind of a below the radar right now, Alabama, Tennessee, and northern Georgia, but not for long. So getting early. So speaking of the product, let's go with not too much detail, maybe 7 more minutes of it. So you offer kind of two different kind of product. One is a resale properties in those markets. The price range is for like the low 100s to the mid to high 100s resale property, older types, all rehab, turnkey, positive cash flow with 25% down payment. And the other core product you guys offer, which is a very, very exciting, is new build, new construction. That you have not that many so far, which is not very easy to get those. They're all in the low 200s for right now, but very, very soon it'll be the mid 200s, maybe even higher in a very short term future. So tell us those two core products and give us a little bit of the number crunching aspect of it. So
yeah. So on the resale side, that has been what we have done for many, many, many years. We've recently 3 years ago, getting into the build to rent market, just because we recognize that there's an inventory shortage and that new home construction is something that's highly desired by investors, and it commands a higher rent, right? Because it's just a nicer, everybody loves new versus a 1930 property that's been renovated. Interestingly enough, we use the same materials in our new construction, our new build to rent properties, as we do our rehab. So same countertops, same flooring, same paint colors, same window treatments, all the same hardware. So it's really hard to tell the difference between on the interior of a rehab property and a build to rent property. The outside, you can always see, you've got some more character with your older properties, and then you've got through more modern and new looking on the new construction. So on the rehab properties, they're usually, I would say, between $100,000 and $170,000. Good cash flow on those properties. You're looking at a rate of return on unlevered capital, anywhere between 9 and 10%. And then on the new construction, it's very similar on the rate of return. Cash flow might be a little bit higher just because the rents are higher for those properties. And the penchant and the appetite for the new construction is not only coming from investors who want to own those properties and be landlords of those properties, but we also see a really, really high demand from our local markets just wanting to buy that as a primary residence. So we are doing both.
Yeah, that's really good. And by the way, over the past few years, our investors that we sent to you to buy your properties, we have received nothing but outstanding testimonials, outstanding experience. So you not only say the things, you prove it. The proof is in the pudding. You what's the other word? I mean,
reputation is everything, Seewing. I mean, it could take just a split second, one wrong decision, and that negative information can just fly, especially through social media channels. And it really takes a lot to build a reputation over time of doing things, doing right by the investor, even if it means we lose money. And we have done that, in the past. If it means, doing right by the investor, we do that. So, and that is what builds your reputation over time, is really delivering to what the customer's expectations are. And even if we fall short on the expectation, what did we do as a company to rectify it, to make it right by them? And that's what we have done over the course of the time we've been in business to deliver what we'd love to exceed expectations, right? If you can exceed expectations, that generates a lot of buzz. Most of our sales come from referrals of existing clients. And so it's so nice to get that nice feedback from you and your clients. Do you please everybody? No, but there's things that we can do to make it right for you. And that's the kind of company that we are. It's not like, well, sorry, it's your problem now. That's not the attitude that we take. That's why we have a dedicated customer service team, so that if there is any issues, it's communicated directly through that channel. And all of our investors, they get assigned one dedicated customer service manager. They manage about 200 accounts or so. And every 30 days, that customer service manager is talking to that investor. We'll take the compliments, we'll take the great, hey, you guys are doing a great job, or hey, I'm really dissatisfied with this. Is there something that we can do about that? And so these are the things that we look at on a case-by-case basis. It's not just, we don't just operate on one policy for all. It's, we look at what the situation is and go, okay, how can we make this right for the investor? That's the kind of leadership, that's the kind of mindset that we have, because we have a personal, my business partners and I, we have a personal vested interest in our investors' success, because when they succeed and they broadcast that, that's how we grow. And then we like the feedback, because we get better on things that we could do better. So we're always a work in progress, and we're not like we know it all and we're perfect, but we do a darn good job on delivering results to investors.
Yep, I concur from third-party references. Now, let me paint this as we about to conclude this presentation. Let me share with you a potential action plan for investors that want to work with you guys. Here's my goal. Okay, I want to be ambitious. So let me paint this hypothetical picture of a typical realistic action plan for other investors that want to work with Spartan Invest.
Okay.
I see that capital resources, down payment, giving availability. I could see someone over the next couple of years aggressively and ambitiously can purchase at least 10 property portfolio from your team. Let me tell you how to do it. And this is where I'm going to potentially train and mentor and consult my risk investors that are motivated, that can do this if they come to your market. And so what I envision for highly motivated investor to work with you guys is to using this 10 property acquisition scenario is to buy at least one property in your market in Tuscaloosa, one in Birmingham, Alabama, one in Huntsville. That covers Alabama, 3 properties there. Then one in northern Georgia. I forgot the name of some of your properties in your Roseville, yeah. Not to be confused with Roseville, California, which is
it's ROSS, Rossville.
Rossville, northern Georgia. You have a market submarket there, product there. So that makes 4 properties. Okay, 3 in Alabama, 1 in Rossville, northern Georgia, and then 1 in Chattanooga, Tennessee, right? And 1, 2, 3, 4. There are 5 markets already within your system, within your umbrella. That will be the resales, the resales you have, those older properties, rehab properties, and all that, turnkey. Then you have limited opportunities in new construction, which is not easy. So you have new construction, several of them in Alabama. So they can buy 2 or 3 of them, right? So 3 cities in Alabama, 1 in Georgia, then maybe 2 or 3 more new builds within your system. Let's say, for the sake of discussion, 10 property, right, in the next couple of years, with 20 to 25% down payment. So from a high level, that's a nice so-called asset allocation. That's a nice geographic allocation, because you and I will have the same philosophy. When you buy a portfolio of rental properties, you need to diversify your asset. Do not put all your eggs in one basket, which is no different than really the stock market and the mutual funds, right? You do a asset allocation portfolio. We do it in a way in real estate, which is no different. So because every city, every neighborhood, every sub-market is different. There's no such thing as a national real estate market, right? Each market has its unique characteristics. They have their unique economic factors. So you can make the argument, let me conclude by saying a 10 property or more per investor that buying your market, if they have the money, create that portfolio right there. Right there, they have the portfolio geographic allocation, different market diversification, and that is the icing on the cake. That is the plan, and the beauty of it is that your team, Spartan Invest, can manage the whole portfolio, right? And you have one property management, one team under one umbrella. So it makes it very efficient to do this for the long term. So that is my conclusion. That's my takeaway from this presentation. What is your final takeaway from what I just said and overall?
Yeah, I think a lot of times the investors kind of wonder, how do I get, if they've never done this before, they ask themselves, how do I get started? And really all you need is your down payment and credit score, above 640, really 680 and above, you get better rates and terms. But really 640 and above, and a down payment of 25% on a house between 100,000, and our new builds are up to about 240, right? So you're looking at anywhere from $25,000 call to $60,000, right, as a down payment to get started. And so we have investors, Seewing, that have, and I'm not even sure if some of these are yours, but we've got investors that have 31 doors. I've got several investors that have more than 20 doors. Our average holds 4 doors. Our average investor holds 4 investment properties. And then when they have the opportunity to add on another one, they do. We recognize the first one's always the scariest one, because it's kind of like that parting. It's like, what am I going to lose? I don't want to lose. Nobody wants to lose. We invest to win. We invest to earn. We invest to build our wealth. And is there risk on any investment? Yes, there are. But there are things that a reputable turnkey company can do to mitigate those risks, such as the inspections that we do when the asset is distressed, so we know what repairs need to be done. It's the quality control that we have on the contractors that are working on the properties. It's the accountability piece every 5 business days, where we're having a meeting and we're tracking everything from supplies and renewal rates and security deposits per week and things like that. So we really operate it like a business, and you're not going to get wealthy off of one, but this is where you start, right? You start with the first property, And let's just take an example, right? Because see, when you were talking about building a portfolio of 10, and that's what a lot of investors, when they come to me, they're like, I want $10,000 a month in 10 years. And then we'll kind of back into the number of properties that they need to get them to that number. And sometimes you don't need 10 properties. Maybe you only need 5 that are higher priced with higher rents, or maybe you want to go more 15 properties or 20 properties with, lower acquisition costs. It doesn't matter how you slice it. It's just a matter of you have a plan. You want to get to a certain dollar amount in passive income by a certain timeline. Then we look at your starting capital. And sometimes you don't need a lot. You just really need that 25% down on the first, call it, right? And then don't worry about the how. The how will happen. You just have to have your why that's big enough to drive you to do things that you wouldn't normally do. Because I know when it's starting something new, there's a lot of resistance and hesitancy and friction, right? And there's all these reasons to find out, call them reasons, excuses why not to, because your neighbor said this, or we had one bad experience there, or that, the other. If it did not work, I would not have a business, nor would I have investors that have 20 properties or more that they own independently or individually, or maybe with a spouse, that we manage for them. So think about it this way, in short. Real estate could make you a millionaire faster than any other asset class, in my opinion, right? Because let's say you were to, I'm going to make simple numbers here. Let's say you guys were to invest in 10 rental properties over some period of time. Depends on your capital. Some of you will be able to do it a lot sooner. Some of you, it's going to take a little bit longer because you need more capital to come in to acquire the asset. Using the equity that in your home, in your rental properties, to withdraw that to go buy another asset is what a lot of our investors do to build their portfolio. So don't worry about the how it's going to get done. Just focus on why you're doing it, and the how will show up, especially with the people that you align yourself with. It's all about the team. So broad-based numbers. If you want $1 million in real estate, essentially what you need is $250,000 in capital. Now that sounds like a big number, but what if you just took that $250,000 and divided it in $25,000 chunks? That seems a lot more doable, right? So you have the 25,000 gets you into your first, then you get the next 25,000 or 25% down, whatever the purchase price of the property is. And this is how you do it, one property at a time. And if you're 50, I'm too late, it's too late for me. No, it's not, because life expectancy is extended now through all of the medical technologies and breakthroughs that we have to prolong a healthy life. So as you're 40, 50, 60, maybe even your 20s or 30s, you're listening to this, you want to build out your financial future so that you have the quality of life that you have now, you can maintain, but without having to work, right? And this is what the power of real estate does. So, and by the way, no one shows up after you have, let's say you did acquire 10 properties, and now the total value of your portfolio is $1 million, right? That $1 million will compound as the equity grows over that entire portfolio, right? So, but you wouldn't earn that if you didn't have it, if you didn't have the properties. But if you have the properties, it helps you earn even more. So no one shows up and says, hey, by the way, you're a millionaire today. It just slowly happens because you just acquired one property after the next, after the next. You build your portfolio, you earn in the 5 ways. You reduce your tax liability through the depreciation, you get the cash flow and the equity growth. These are all the factors. And the hedge against inflation piece of it is you get to increase the rent over a fixed 30-year mortgage payment. That payment never changes, but your rents do. So we know this. This is what we're trying to communicate with you guys. And so in a 5-property portfolio, a 10-property portfolio, it doesn't matter. Build one to produce income for you. That is the way to build wealth.
Well, Maureen, McCann, very well said. I just thought of this. Okay, this is just my own thoughts. Okay. Spartan Invest. When I hear this word, I say to myself, and you guys are real estate warriors. Mm-hmm. I'm a student of history. I'm a student in ancient history. I know where the word comes from, Spartan. The Spartan warriors back in the Greek history.
Yep.
And there's one battle in the Battle of Thermopylae, and then
Mm-hmm.
King Midas, 300 Spartans fought against 10,000 Persians, and so they were brave warriors. They have this warrior mentality. They want to preserve their culture. They want to repel the enemy, and so Spartan Invest, you guys, your staff is they have this core philosophy, quote unquote, the Spartan way. And
We
when
named our company after that battle that you talked about. This is what we've named our company is named after that great battle and those great Spartans. And there's a saying, and I think I may have shared this on a previous podcast, but when the Spartan man was called to battle, it was very customary for his wife it was like a presentation of his shield, right? And so she would make the presentation to her Spartan warrior husband, and she would say these words, and this is how we sign off as owners in our company. She basically presented the shield and she said, "Come home on this or with this." It's basically a very, very strong sense of pride. And so for us, it is you do everything that you can to win, right? Because you're not coming home on that darn thing, you're coming home with it. And that's the mentality that we have in our Spartan way, our Spartan culture, and it's even embedded in our name.
Well, real estate investors that are investing through you guys, they are indoctrinated in the Spartan way. So together, everyone will achieve more. Thank you so much, Maureen McCann from Spartan Invest. Great message, great, powerful presentation. Thank you so much. This is Seewing Yee from the University Network. Have a nice day. Bye-bye.
Bye.